Welcome to a Wiser Retirement podcast. Before we get started with the episode, I want to tell you about a new ebook available on our website called Buyer Beware. Why do they keep trying to sell you that annuity? This ebook covers the various types of annuities, negatives to owning annuities, and better investment alternatives to annuities. To download this ebook, you can click the link in the episode notes or go to wiserinvestor.com and you'll find it at the bottom of the page. Now on to today's episode.
Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith, guiding you to financial freedom. Today is my co-host, Robert Swarthout, founder of and CEO, portfolio manager of Teton Crypto Capital.
Good morning. How are you doing?
Doing good. So awesome. We had a lot of downloads in our last podcast with you talking about securing your digital life.
Yeah. I mean, just think how many more downloads had we included all the information.
And you wanted to add something to that episode. Yeah. So this will be a bonus feature of the last crypto edition with Robert.
Yeah. So, I like to listen to each podcast as it comes out, just kind of, see how it went. And I kept waiting for myself to mention VPNs, and I never did. And then I felt like a buffoon. So here we are.
So explain VPN when it comes to security.
Yeah. So many people probably end up using a VPN in their business life and for work connections, but it stands for virtual private connection. It's really just an encrypted connection back to the internet from your current device. You would likely use this if you're using public Wi-Fi or Wi-Fi that is not your house.
Right.
You can even use it in your house if you want to, but it's typically intended for spaces that you would consider untrusted, and to allow you to have a more private connection to the internet. It keeps you from being a target of attacks. And also, I guess the other side of it is it helps the current internet service provider, in that case, not to have analytics on you. So what kind of sites you're visiting and all that kind of stuff. So anyways, we missed that. It's an important piece.
And you can actually put this on your phone. Let's see if
absolutely.
Apple.
Anything that connects to the internet can be connected to the VPN these days. Yeah.
And I thought there was maybe it's AT&T Business, but I know on our phones there was an AT&T VPN option for a while. I don't know if that's still integrated. Right now we have a Vast that has a mobile application as well, which goes onto the phone, which creates the VPN. But yeah, I think the big thing is you got to just stay off of public Wi-Fi as much as possible. You can't really trust it.
Or if you're on it, use a VPN, and then it's functionally trusted internet. For the most part. So.
Very true. Well, thanks for adding that. So what do you want to cover today?
So I think under the education section, we're going to talk about how an ETF is structured. This might just seem...
This is my wheelhouse.
Yes. When I suggested this is a quick yes from you on this one. And I think, we're going to, I guess, jump around here a little bit, but in ETF, why are we talking about that on the crypto edition? There's been a lot of talk over the last probably 2 years at this point, but, certainly the last 6 months about a Bitcoin spot ETF. We have a futures ETF, we have a futures leveraged ETF, but we don't have a spot ETF. And, as to me, it feels like it's getting closer. You're having traditional TradFi players come in and be the sponsors for these ETFs versus before it was more crypto focused companies. So you're certainly seeing a shift in that narrative, and not just narrative, but just like that perspective. And does the SEC approve it? I don't know, but the last thing on our notes that I guess we can jump back to what is an ETF, but BlackRock, the world's largest asset manager, has submitted an ETF. The SEC asked for revisions. We talked about this on our last podcast. And then they came back on July the 13th and asked BlackRock, said that they acknowledged that it was received, and it started a 21-day period for comment periods with the SEC. So anyways, let's jump back to what an ETF is and kind of how it's structured and how it works.
Yeah, I mean, obviously, ETFs are much more popular now than when we started using them back in 2004. 2004, I naively thought that we're going to be the experts of ETFs, and there were only 200 at the time. Now there's thousands of ETFs, but really since 2004, moving forward, money has moved out of the mutual fund setup into the ETFs. So it used to be that ETF meant that you were buying like the first ETF, SPY, which is a reflection of the S&P 500. That was created, I believe, in 1991 with the intention that active managers didn't know where to put money, so they just wanted to create this this security that they could park it in the S&P 500 so they wouldn't miss out on average returns until they have found other investments. Then it kind of built from there where, there's futures on SPY, there's options contracts on SPY. So it started to look more like a real security at that.
Absolutely.
Well, it is a real security, but a little more traded more like a stock, right? At that point. So, the benefit, well, fast forward to today, the ETFs do not mean passive investing. There's very active ETFs. There's ETFs that don't actually own anything. Those are called ETNs, exchange traded notes, which are less popular here in the US, very popular over in Europe. I've always thought they should call them ETPs for exchange traded products.
I think that's what they do in Europe.
Yes.
If I'm not mistaken. Yeah.
They should do that here as well because it can be very confusing. I think though that it's such a wide variety of different ETFs that are out there that I don't think most people assume anything anymore. You have to understand your underlying asset and how it's structured, how it's built. But there's 1933 Act ETFs and 1940 Act ETFs. So the big thing is, do you own the underlying asset? So if the ETF went out of business, do you get it? Now, there's been a few ETFs that have liquidated over the lifespan of ETFs, and it's been very orderly, nothing chaotic about it. But otherwise, theoretically, if an ETF went out of business, you would get delivered the security. So if SPY got shut down, then you'd get 500 stocks delivered to your brokerage account, right?
Right.
And hopefully you had a broker that trades for free, right?
Right.
If usually what happens is, ETFs are really good at price setting. So, for instance, during the financial crisis, you had bond market kind of seized up in September of, I think that was September of 2008. And when that happened, ETFs kept trading with plenty of liquidity. And so people said, oh, ETFs are broken. See, the price is way off where the bonds are. But the problem is the bonds weren't trading, but the ETFs could be traded. So, and this is still a great debate if you went to an ETF conference, but bottom line is people were able to trade the ETFs where they couldn't really move bonds for almost 30 days. So in the end, ETFs are a pricing mechanism.
Okay.
Because the market can easily trade them.
Yeah.
So typically how an ETF gets structured is you're going to have a sponsor or an issuer. So for example, SPY is owned by State Street. So State Street would own is a sponsor of that, and then they're going to work with a AP, authorized participant.
Okay.
So that could be like a Knight or somebody on the trading floor that's really buying up the shares of stock. So they're creating these shares. So they're going to go out and buy the S&P 500, and they're going to wrap it up into one share of SPY.
Right.
And so in the end, there can be some arbitrage on that. So it could be that the basket's worth more than the share or vice versa.
Right.
So you can track the net asset value of an ETF. So when you go to a place to trade, and we had to do this, now there's so much liquidity, and we stick to, at our firm, we stick to the bigger firms, I mean, the bigger names.
Bigger sponsors.
Because we know that they have the volume. We don't have to worry too much about that. Or we're moving so much in volume that we don't even have to go through the exchange. We just go directly to the AP through our custodian.
Right.
And typically that's 25,000 or 50,000 shares, depending on what the issuer states is
like a minimum.
Right. So what you want to do, or how this all gets set up, is that creation redemption process that the AP is doing. In my world, it shields a lot of tax liability. So if you own a mutual fund, mutual funds give you that capital gains at the end of the year.
Right.
And you have to pay income tax on it. And like in 2022, a lot of people had to pay capital gains tax on money they didn't even actually make.
Right.
So it's really bad in most cases. So ETFs typically won't pass through capital gains unless you're in really, really extreme circumstances.
Yeah.
Or if it's an actively managed ETF, there's a chance that you're going to get it a capital gains bill. But your traditional large, mid, small S&P 500 type ETFs, they're not supposed to be doing that. And if they did initially, like in, I say, the early 2000 or the late 2000s, let's see, 2004. So after the financial crisis, so 2010 to 2012, there were funds that passed through capital gains, and people left. Like the funds shut down.
People didn't like it
because it was broken at that point.
Is there any mechanism for a mutual fund to convert into an ETF?
Vanguard did it that way, where the ETF is like a reflection of the mutual fund.
Okay.
I'm unclear exactly how that process works on the back end.
Right.
But the ETF still has the same structure. It's still an authorized participant. It's still the basket. You still own the underlying shares. I think maybe they did it through shares of mutual funds as the back end. I'm not quite sure.
Gotcha.
But the benefit of ETF is it trades on an exchange like a stock. So a mutual fund, you sell it at 5 p.m. It clears based on the net asset value. Where the ETF is a constant value during trading hours.
Right.
So you can sell it and buy it.
You can trade it. Actively trade it. Yeah.
Yeah. Which is not what we do.
Right. Correct.
but liquidity is nice inside the ETF. And then you think about you think about bonds. So bonds are inside ETFs, but it trades like an equity.
Yeah,
it's an ETF. Right?
A bond being inside an ETF allows it to be fractionalized, right?
Correct.
And allow somebody not have to spend $100,000 on a school district.
Yes, exactly. Yeah. And then obviously the dividends paid by the stock get passed through to the ETF, and this it's gone into the ETF shareholders. But this gets into the weeds. But like an SPY, which is the S&P 500. It's paying a dividend, but it holds it in cash before it sends it to you at the end of the quarter. Where like an IVV, which is owned by BlackRock, or a VOO, which is owned by Vanguard, they actually reinvest it back into the index before they send it to you. Well, markets are typically usually up. So there's a little bit of a cash drag on SPY. This is getting to nitty gritty, where IVV and VO typically would have a slightly higher rate of return because it gets reinvested. Right. But in terms of like expenses, ETFs typically have much lower fees, and then obviously the structure of ETF promotes, for the most part, transparency. This is not as true as it used to be, because there are more active ETFs out there that don't disclose their holdings. But in the true sense of an ETF that represents a index, you have daily transparency, or at least monthly transparency in some of the more active ones.
Gotcha. Very cool. Do you think would you change anything about the ETF besides the name?
No, actually, I think it's a really good structure. I think in the next 5 years, maybe ETFs won't be as prominent.
What do you think is going to replace them?
Direct indexing. So I think
going back to a single stock world.
Yeah, you're going back to a single stock world, but you at the Schwab conference right now, I think we'd be doing that at our firm, but it's more expensive than holding the ETF. And we don't have any biases. Like, we're not trying to build ESG portfolios or anything like that. So we'd just be buying traditional index. So you have to beat 3 basis points. That's what it comes down to. Is we're paying 0.03% for the S&P 500. How can it get cheaper than that? Now, for a lot of our wealthy clients with large brokerage accounts, there's tax loss harvesting opportunities, which we do that with ETFs now, but you could even do it at a security level going forward. And so custom indexing is basically, we have the formula for the S&P 500, and we're going to build it and hold the 500 companies ourselves, or a replication of that.
Right.
And then if we have, let's say we have an Apple executive who comes into the firm and they have a large concentration in one stock, then we can out. We can, and we can build around it, and then we can tax loss harvest real time, all through the investment process, and then try to sell off some of the Apple at a gain, selling off something else at a loss. But I think the ETF itself serves clients very well. For us, is enabled us to scale.
Mm-hmm. Oh, absolutely.
20 years ago, there's no way we could have had the number of clients that we have, and our mandate, I call it the heart of the firm, is to help everybody, right? So someone comes in with $100,000 or $500,000, most people can't help. Most
advisory,
most high-end firms,
right.
Your Edward Jones is going to take you and charge you a commission and all that, but most high-end firms, those are well below the minimums.
Yeah.
But we're able to still do that because we can scale these ETF models. So from that standpoint, it worked really well. Also, ETFs allow individual stock pickers, if there's any of those left, to say, oh man, I really need to get access to airlines. So they don't know which stock to pick necessarily, but they can just buy the sector.
Exactly.
So that was really good for ETFs. But in terms of what we're talking about today for crypto, specifically Bitcoin, I mean, and then now I'm stepping out of my realm and back into your realm, but I think there's so much interest in Bitcoin. So I just wonder if an ETF is approved, because the BlackRock ETF, the whole thing has been, there's no regulation. You could have lots of theft, but the BlackRock is going to be custodied at Coinbase.
Correct. And that was part of the revisions that the 5 or 6 different applicants came back with, because at first they didn't have who was going to be their custodian or where the trading was going to happen.
Right.
And then all within about a week or two, they all came back with revised applications, basically mentioning Coinbase was the way that they were going to do it. And Coinbase's stock was up like 35%.
Right.
It would be a big deal for Coinbase. And honestly, they're almost like the de facto only answer right now if you want to use a US-based company.
Yeah, correct.
So, you have BitGo, which does custody, but there's no, they don't have an exchange. For better or for worse right now, Coinbase has got all the different pieces. They have the custodian piece, they have the exchange piece, and
right.
A broker-dealer license, which they don't use. So
my only concern is that there can be some pitfalls with ETFs. For instance, the oil ETF.
Okay.
So how it was structured when oil, I guess during the financial crisis, remember at the beginning, the oil was shot up way up.
Yep.
Right. And this, I'm having to go back deep into my memory, but I was there front and center for it. But I remember that how they structured the oil ETF, it was never built like $150 barrel oil was just something that nobody ever fathomed. And so it broke.
Okay.
It didn't work. And so I think about Bitcoin. Now that oil that'd be future contracts too, right? You don't actually own barrels of oil.
Yeah. So that'd be more akin to the Bitcoin futures probably.
True. But still owning a spot Bitcoin ETF with the massive price fluctuation that Bitcoin has, I don't have the answer, but my concern is how stable is the ETF going to be versus the actual price of Bitcoin? And
I think
is the ETF going to be priced? Is it going to set the price of the Bitcoin?
Correct.
Does the tail wag the dog? Or
that's an interesting concern. I know that part of the SEC's concerns for not approving the spot, ETF for going on a year or 2 years at this point is they were worried about there wasn't enough data in the market to prevent manipulation of the ETF.
Yeah.
I think that concern has been alleviated. If there's enough for a futures contract or a futures product,
true,
there's got to be one for spot.
Yeah.
There's definitely been a huge evolution in just Bitcoin liquidity and all these different exchanges. So the idea that they would be going through Coinbase. Coinbase is so big,
right,
in the grand scheme. I think that the idea that somebody can manipulate it would take a lot of money, and maybe there's enough money sitting in brokerage accounts waiting to buy a spot.
Right.
I just
we have insider trading rules, things we have to follow, and I always kind of laugh at that. And I think insider trading rules are very good.
Yeah.
But how it applies to me and my firm is one of our largest holdings is the S&P 500. And I think, my gosh, if I took the entire firm and all my friends' firms.
Mm-hmm. You're right.
There's no way we could ever manipulate
it, right.
an ETF of the S&P 500. Like it just wouldn't happen.
Yeah.
You'd have to be like the day before Thanksgiving on that short trading day that ends at 1:00.
You do it at 12:45.
Right.
Yeah.
But I think about the Bitcoin side is what if the ETF's not manipulated? What if Bitcoin itself was manipulated? But is that happening?
I mean, nobody knows for sure. I'm willing to kind of be a little bit riskier with my opinion here in the sense that I believe that there's market manipulation in crypto right now because it's worldwide. Like governments don't agree on anything across the world. So it's like the idea that they're going to have some kind of common framework to kind of go after this is kind of not the point. I think that at some point, what the SEC, part of their claim is they're trying to keep crypto away from the current financial system because of the risk of it.
Right.
That's a difference of opinion there and where the risk lies. But
true. But if you're creating a Bitcoin ETF, in my mind, you're never going to be transacting in Bitcoin. Like it kind of solidifies it as an investment and not.
Well, that's the point of this spot is it's supposed to exactly track spot Bitcoin as if you're buying it directly on Coinbase, or any other exchange for that matter.
Plus the fee, whatever that is.
Plus, the fees. Some exchanges have no trading fees on Bitcoin specifically, but they would on other cryptos. So it just kind of varies per exchange. At the end of the day, I think that you have to understand just the scale difference here. Like the total crypto market cap is probably like $1.3 trillion. That's like nothing.
Yeah, but what percentage of it has never moved?
Percentage of Bitcoin?
Like 30% of Bitcoin has never actually moved. It's just sitting in somebody's wallet. I haven't looked at it in a while. I mean, and the question is, do they have access to those wallets or is it lost forever? Right.
Like there's a lot of questions that can come up there. But, Bitcoin roughly, I could look real quick, but it's probably roughly a high 40s percentage of the market cap. So Bitcoin's market cap is 580 billion right now, and the total crypto market cap is 1.2 trillion. So just under half. So it's probably 45%.
Yeah.
A spot Bitcoin ETF. I mean, $578 billion is not much in the grand financial system.
True. So then what changes? So let me ask you, and this is a rookie question, I guess, but
okay.
You create the spot ETF price. So so people buy this ETF. There's people are buying Bitcoin.
Correct.
So it's going to affect the supply demand of Bitcoin.
Yes. And
so in theory, if you think people are just chomping at the bit to buy the ETF,
well, I think there's people.
Is that not going to? That's going to throw the price up. You would think.
Supply and demand. It would be interesting to see how it ends up laying out.
But there's more Bitcoin being created.
Yes, but
not at that rate.
Not at the rate that would probably satisfy the market. So I think the price does go up. Not financial advice, but I think the price does go up. It's not a trade that I will be doing, but it's You also wonder, how many people are on the sidelines that have had Bitcoin for a long time? They're waiting for this moment for this quote unquote spike. The first day, it's going to be volatile. There's no doubt about it. The first month is probably volatile. I think over time, it kind of gets back to more of a crypto type volatility scale, even though that is quite volatile.
It is.
I think when this launches, it's going to be extremely volatile.
But what changes? You have the ETF now, or potentially. The industry's still unregulated. There's nothing's been solved. So I'm thinking from a financial advisor standpoint. Mm-hmm. Okay, Bitcoin's probably part of the future. We should maybe put 1% of that ETF into portfolios.
Not 1% of Bitcoin ETF into your portfolio. No, because you're so concentrated. You're betting on one horse in the crypto race. I think that. I'm not a financial advisor.
I'm just saying if you did that. The point is if you did that.
And that's the only one you could buy right now. Or could buy potentially.
Well, there's BITW.
Right, but that's only for their customers, right? Isn't that one you have to be or is that Wisdom Traffic? It's one of them's got a product you have to be part of.
Oh no, you have to be. Yes, that's the Wisdom Tree product. This one is Bitwise.
Oh, it's like an index of sorts.
Of sorts, yeah. Which you stated that half of those will go out of business.
Yes, I will still stand by that.
But the point is that I still have to get over the hurdle of the fact that this is an investment. This is not regulated. Could be heavily manipulated, right? And could be stolen. And if Coinbase goes out of business,
Coinbase is not a trust company, so you would be in line with creditors, correct?
Which means BlackRock would be in line with creditors. I just assume at that point BlackRock just buys Coinbase, probably, right?
Potentially, it's a small enough number for them to make that problem go away. Right. You know, I have trouble envisioning a world, even if I'm trying to truly go on a fantasy land tour here, like where the ETF goes so bad that Coinbase has got a problem. Coinbase risk here is they aren't able to satisfy all the services they need to provide to these ETF sponsors. Like Coinbase Custody is a well-regarded custody solution. Like it's already being used by many institutional players to store stuff.
And how do you think the SEC lawsuits affect Coinbase's ability to execute?
I mean,
going forward?
Just because this is not cloudy enough. I mean, the SEC and Coinbase are, the SEC has sued Coinbase for selling illegal securities, unregistered securities.
Right.
I mean, that's a little bit further in notes, and we'll talk about that in a minute. But like, you're right. It's unregulated. It's murky. And I don't use murky in the negative sense that like it's sketchy. It's just purely, it's confusing.
Right.
And I think that honestly, it's been made more confusing over the last year by the SEC's actions with some of these lawsuits they've made, in particular over the last 3 months when they're suing Coinbase. But I don't know, we're just in an interesting time in crypto. Like, I don't think that there's so much demand out there for Bitcoin where it doubles when this ETF, assuming an ETF gets approved. But we know that there's the Grayscale Bitcoin Trust, GBTC,
right
out there. That would get converted. They've applied for an application for an ETF as well. That would be converted from a trust into a true ETF. So, it feels like we're much closer. Like if anybody's going to get one approved, it feels like BlackRock. As much as I'm not excited about that. Like all these other players have been asking to do it for years,
right?
And then BlackRock comes along and is like, "Hey, I got this great idea." And
BlackRock probably knows their timing well, and they definitely have.
They have some connections.
Very well connected.
And I think we even mentioned this in the last podcast. Like their record of getting ETFs approved is absurdly high. Like it's like 570 to 1. I don't imagine this is going to be number 2. I'll take those odds.
Yeah.
So,
well, any ETF has issues as far as risk. I wrote down a few. Regulatory issues. Obviously, I think if you buy the ETF, cryptocurrency obviously remains in a gray area.
So Bitcoin and XRP are the only ones with current U.S. clarity by the courts and or regulators.
So that means you run a less risk of it being decommissioned because of
right.
But it's not a legitimate.
But not to kind of jump on a negative bandwagon here, but you will use the example of Coinbase went public in spring of, I think it was May or April 2021.
Yeah.
The SEC approved their S1. The SEC is now suing Coinbase for doing exactly what they had in their S1 for saying it's illegal security. So It's like one of those can be true, not both.
Yeah. Well, not just. Yeah, it's not just SEC. I feel like that's like the whole government theme right now, even though what's happening with Google and that lawsuit about advertising.
Right. Yeah,
like the government literally approved a Google merger only to come back and say, "Oh no, that's a monopoly. You can't do that." And you're like, "What?" But you approved it.
Yeah, it's the it's weird. So
liquidity risk. I just that's the thing I would want to watch really closely is can the volume, is there a chance that Bitcoin freezes up, that it can't get moved because all the buys and sells and transactions?
Yeah. To be clear, Bitcoin itself would have no problem. It would be the exchanges having liquidity for it.
Yeah, that's true. To buy Bitcoin.
Yeah. So in this case, it's very centralized. can Coinbase have enough liquidity amongst their exchange and OTC desk to satisfy all these ETF sponsors? Because they're all coming to Coinbase for it. It's not like they're all going to 5 different exchanges.
They also have to buy enough to keep. So how this works, the APs typically have the stocks.
Right. So my guess is
they own this. So Bitcoin's have to buy, or Coinbase don't have to buy a ton of Bitcoin.
Well, Coinbase or BlackRock has already kind of have their own stockpile. Like, there's long been rumors, and they're nothing but rumors, but that some of these big asset players have been slowly accumulating, Bitcoin and or other cryptos, but more so Bitcoin. So like maybe it was in preparation of this, or they're just playing a trade. Who knows? But so volatility will certainly be magnified with obviously low liquidity. So,
well, to have a Bitcoin ETF, I don't think is a bad idea. It's not my mandate from our clients to be first.
Sure.
And so it'll be very interesting to see the liquidity side of it, how it trades. I'm sure there's going to be tons of fanfare. It's going to be all over CNBC when it happens.
I'm going to be telling you how to buy it.
Yeah, right. That's in the end, people don't have a whole lot of patience when it comes to investing. Something we have to learn. So I think it's going to be definitely be an ETF that you park your money in there, and then maybe you take the earnings as it outgrows your allocation percentage. But it's not something that you should be thinking, I'm gonna be the next Bitcoin billionaire.
Yeah, I think that the idea that you're a Bitcoin billionaire from buying it, whether it's an ETF or even you're just buying spot Bitcoin on Coinbase, those days are behind you. Unless you have a lot of money and you're just looking for, your 100% appreciation or something.
Right. Right.
So, I'm looking at all the different factors here. One thing that I, that didn't end up in the notes that's coming to mind now is, Bitcoin's use, its power consumption. There's been a lot of talk the last 2 years about how it's using green energy and, around the world in different places. And I think that's certainly been a narrative, and it's true in many cases, but how it's been pushed by Bitcoin maximalists. Does governments around the world decide to attack Bitcoin because it, quote unquote, doesn't fit the clean green agenda?
But I thought that had been mostly cleaned up. No? No pun intended.
It still does use a lot of power. That doesn't change.
A lot of power, but maybe it was a biased article, but my understanding was that there hydropower and wind power and solar power, all these things were
right. But I'm saying, just because that may be true doesn't mean the government may not come after it.
Yeah.
Right. Like they could change their mind. Power. We've seen that with the Google case. We've seen that with the Coinbase case, right? So
that's true. Well, that just means it won't be in the U.S. I'm sure other countries would welcome it.
Correct. But does the U.S. government decide they don't like some other countries' power, letting a Bitcoin use, say, bad power,
right?
And they decide to delist an ETF. I don't know. I mean, that's a conspiracy theory for sure.
True.
But it's a risk, maybe, albeit small.
Yeah.
So
I don't know.
Anyways, we're a little off topic.
I say at this point, if BlackRock is rolling this out, that Larry Fink has plenty of friends in the White House that will protect him,
and they're in this. As an aside, it's the ESG by BlackRock is fully dead at this point because as of I read this morning that they appointed the CEO of Aramco to their BlackRock board. So you can't be part of ESG and be on board with all that oil.
Don't even get me started on the ESG thing.
Yeah.
I just wish there was an award.
Yeah, for being right.
Yes. Yes. I mean, we have a mutual friend actually through the Berry board that was touting ESG on LinkedIn, and I just sit there and just kind of laugh of oh my gosh, he's literally just towing the company line, and he looks pretty bad right now. So I'm just the whole thing is I've seen it so many times. That's the benefit of doing something for 23 years is you start seeing patterns, right? And you look back and you go, man, I remember when everybody had to have low volatility ETFs,
Right.
which became more volatile than the actual market, right? So nothing beats the S&P 500. Even the ESG rating,
Right.
S&P 500 is the highest rated ESG ETF. But yet BlackRock comes up with a whole line of essentially has the same stocks in it.
Higher fee products, yeah.
For $56 million more in revenue for just one ETF because they charge five times the S&P 500. But nobody talks about that. Nobody talks about that. And it's to the point where I think, am I crazy? Am I the one that's crazy? It's
Right.
like I'm just looking at the data in front of me, and this is very obvious. But anyway, this is not an ESG topic podcast. We're going to get back to crypto. Let's talk about some news.
Yeah. So, just as a quick update on CBDCs.
I think this is funny.
This first one?
The Swiss National Bank launching a CBDC pilot.
Yes. So they want to see live transactions in the real world. This is not some kind of little test bed. This is actually like soon to be. You can buy, I forget which Swiss franc, I guess. Don't remember the detail, but it's on a ledger.
But if I
somewhere.
buy, does anybody know about it?
That is funny. I didn't even think about that. Like, is it a privacy based blockchain? Probably not. My guess is they're running some.
That would be a big hit.
That would be yes. Oh boy. Okay. I guess the point there is a probably a respected national, Fed bank, and a respected government bank. What's the drawing a blank?
HSBC?
No. Anyways, okay, we'll move on. It's basically like a not the Fed, but the Swiss version of the Fed.
Oh, okay, yeah.
Is the one sponsoring this. So we kind of already alluded to this next topic, the Coinbase versus SEC lawsuit. What was really fascinating in this, there was a hearing, and this is like early on in this case. I think this may be the first, if not second, face-to-face hearing, where there's lawyers and judges, or judge. And the judge asked the SEC specifically if the SEC really wants the court to believe that the SEC approved the S1 for Coinbase to go public, but now claims that the business is not legal. The judge seems to be quite skeptical of this. So this was not something that was live streamed or anything like that. This was like a court reporting that kind of read, and there were some articles from it. It's just really fascinating to see so early on a judge being skeptical of the SEC's actions in this case. And, at the end of the day, it's, I'd imagine this case moves along much quicker because of the next thing we're about to talk about. Because there was in the Ripple versus SEC case, we've been talking about this for, I don't know, as long as we've been doing this podcast. Because that lawsuit, the SEC and Ripple case, was started in December of 2020. And just as of this last Thursday, July the 13th, there was summary judgment came down from Judge Torres. We've been waiting on this since I believe May, maybe even April. And it was a quite wide-ranging opinion, and just kind of the way that she talked about it. In many things, Ripple lost. Be very clear. Like, they didn't win all the points. I never really thought that it was going to be a grand slam win. The SEC lost everything.
They seem to kind of go right down the middle.
It did. The lawyers seem to refer to this as splitting the baby. So it did seem like that. Ripple lost on XRP. They sold directly to institutional investors in the early days. That they actually signed contracts around, not necessarily to appreciate the price of XRP, but just the work that they were going to do together. So they lost that. That was to the tune of $728 million worth of sales. So
wow.
Of the, call it $1.3 billion that the SEC was claiming initially. So Ripple likely will pay a fine here, is my guess, and move on. Like this, they lost. They can, how that shakes out, I guess time will tell. The next piece is programmatic sales of XRP that Ripple made via exchanges are not securities. This was a big win. So this is basically saying that when Ripple was selling XRP on an exchange, the buyer on the other side had no idea it was Ripple. It could have been you, it could have been me, it could be Ripple. So it was a blind transaction. So there was no expectation of profit or from Ripple's interest to kind of further promote XRP. So that was a big win. She did not adopt that investment contracts require a contract. That was part of Ripple's, request for summary judgment. So that was interesting. They also lost in the fair notice defense. That has to proceed to trial. So, she does not allow the fair notice defense to move to trial, which I don't think was ever intended. My understanding was never intended for this particular thing. If it ever got appealed up to the Supreme Court, that's where the fair notice defense comes in, and that's where I think the consensus is that Ripple would have a good judgment in their favor,
right,
with the Supreme Court in its current form and structure. And lastly, the big thing that was, as an average XRP holder or retail, she did not directly address secondary market sales, but in her words, most of the XRP out in the world are not securities. So, if we sell it to each other, there's no contract. I guess we could write one if we were doing a hand-to-hand transaction, but truly through an exchange, it's all blind. So the idea that XRP is not fungible, there's no way to tell the difference between two different XRP, so inherently not a security. There's no way to be able to say this one is worth more than the other because I'm doing something with it.
Right.
So at the end of the day, it was, that her ruling came out around 11 a.m. Eastern on Thursday. And, obviously the price shot up because it's great news.
Yeah.
It went from, I think, 36, 37 cents up to 80 cents, and it's kind of been plateaued around, low 70s, I guess around 76 cents this morning. I've often used, when talking to potential investors for my fund, trying to help them understand. They've heard of people becoming crypto millionaires, and they feel like they have missed that opportunity. And the analogy I use with them is, is a baseball analogy. So we are just, at the time I was telling them, we're singing the national anthem right now. We haven't even really started playing the game.
Right.
Yeah, you're likely not to buy Bitcoin and have 1,000,000% return. I think that's off the table at this point. But there's other assets that are going to be solving real problems with utility that are going to, in theory, have great appreciation. So to update my analogy, now I'm saying the judge on Thursday said play ball.
Right.
Bitcoin has got clarity. It is a commodity. As of Thursday, the current law on the land, the law in the U.S. is that XRP is not a security. It is the only other one besides Bitcoin that has clarity. Ethereum was an opinion of a prior SEC administration.
Yeah.
The SEC today won't even recognize that opinion. So it'd be interesting to kind of see. My hope is, and it seems to be heading this way, that Congress is going to start moving on, actually getting some legislation in place, because it's just not fair. As much as I would like to have an unlevel playing field because I own some XRP, it really should be that we should have a framework. Everyone knows what rules we're playing, and you don't have to spend $200 million fighting the SEC to get clarity, because most people can't afford that.
Right.
So,
do you think Ripple goes public now?
I think that, Brad Garlinghouse, the CEO, was asked that question on Friday. I was listening to a Twitter space he was in, and he kind of, and I wouldn't say he walked it back, but he softened his aggressiveness with that. I think that Ripple, in some sense, yes, they will go public. He talked about how they're helping get employees and early investors liquidity. My guess is that they don't need the cash to go public. They don't need the headache. So for the time being, they're just going to kind of cruise along and make the money that they're making.
Right.
So, are they public in the next 2 years? Probably, but I don't think they're filing the rest one. Ironically, the case is not over. So there's some stuff that has to go to settlement and/or has to be ruled on further. But for the retail investor, the case is functionally over.
So will it show back up on Coinbase?
It already has.
Oh, wow. Okay.
Coinbase and Kraken and 3 or 4 others. It's either said is coming or already is in place.
I kind of look at it as, and this may be a really bad analogy. We can edit this out if it's horrible. But you have Android,
okay,
and you have Apple, 2 different platforms.
Okay.
I kind of see XRP as kind of like the Android, right?
In what sense?
Just in that you can build things on top of this platform, right?
Yeah, you can build stuff on top of Apple too. That's the whole App Store.
But that's kind of like Bitcoin.
You can't build anything on top of Bitcoin. Bitcoin is what it
tried.
is. It's like gold. They try, but
the Bitcoin Cash they had
that's a separate network. They fork it. That is
okay.
So when it's anything but BTC, it is another token, another network, another use of electricity, all those other things.
Same people?
Unlikely. Usually, in the South here, when you see a church on one corner and then like there's a church on the other corner the next day because they had some kind of break.
Right.
That's exactly what happens. They call it a fork in crypto. Likely some disagreement in the community, and they wanted to prove upon it. Some of them didn't want to change the current system, so you end up. There's two different Ethereums. There's Ethereum. There's Ethereum Classic.
Okay.
Ethereum Classic is the original. They wanted to morph it. So Ethereum that we know it today is actually version 2 of the version 1.
So on the XRP, to me, there's more utility than Bitcoin.
Potential, right?
Because if you look at you look at cryptos and you start looking at descriptions, they'll say this is an XRP based whatever for the use of whatever,
sure.
Right?
Yeah.
But you don't see that with Bitcoin,
right?
But
the idea that Bitcoin morphs to do anything but be functionally a digital gold would shock me, because the Bitcoin community doesn't agree on anything besides just that Bitcoin should be the only thing in the world.
There's whole blogs about saying Bitcoin, people should do transactions in Bitcoin,
right? And those are the maximalists. What they don't recognize and like tell you the truth on is it doesn't have the throughput to have. I mean, you couldn't even run a coffee shop off of Bitcoin. No. One coffee shop,
right?
Like it's slow, it's expensive.
Yeah.
And all these other networks that have come along. I mean, David Schwartz, he's one of the initial developers of the XRP ledger and helped launch it. He has said that when he had worked on Bitcoin early in the day and he started seeing the problems that he thought it would run into, that's why they wanted to build a better Bitcoin. That's, maybe that's, a cleaning up a history there.
Right.
And, but it seems true, right? Like, there's a path where that you could kind of connect the dots there. At the end of the day, I think that a lot of there's tons of cryptos out there. A lot of them run on similar networks. Like there's Ethereum, but there's like thousands of tokens that run on Ethereum. So once you boil it down, there's probably of consequence, there's probably less than a dozen different networks. XRP being one, Ethereum being one, and some others. But
so maybe a better analogy is Ethereum versus XRP.
Right. I mean, because up until a couple months ago, we thought Ethereum had clarity.
Right.
It doesn't now, and XRP does in that sense. There's definitely a bit of there's some mudslinging going on between XRP, more so Ethereum, Bitcoin throwing mud back to XRP. The XRP community is just happy right now, been vindicated of sorts. But how it shakes out a couple years from now, we just need laws in place so we can all play by the same rules.
So based on, if we're starting to play ball, like you said, if I was going to buy three, tokens. Yeah. Thank you. What three? Bitcoin, number one.
Yeah.
Number two, you just going right now, market cap?
Probably.
Number two,
Ethereum. And then I would tell you buy XRP. You're not going to buy,
but not Ripple.
Ripple's the company.
I'm sorry. Yeah.
XRP.
Okay.
I mean, technically with the price movement of XRP, it is now the fourth biggest one by market cap. And the only thing that's third is Tether, the USDT, is the stable coin. So it is functionally, my suggestion is if you're going to buy three, buy the top three that's not a stable coin.
Yeah. Interesting.
I mean, I think as Ripple starts to be able to do stuff with US based companies with XRP, I think that's where the game really starts to get interesting. Yeah. Because not just US companies, but they do stuff with US dollars, right? That's so far reaching around the world. There's been a long rumor in the XRP community, and it's kind of been validated, but nothing like, oh my gosh, it's on Ripple's website that Bank of America is a customer. That's a big freaking deal.
Yeah.
If that's true, just due to how much cross-border payments that Bank of America facilitates. So, we'll see. What I've been thinking about the last, since last Thursday is, if Bitcoin spot ETF gets approved, how soon after can an XRP one? Since it's got clarity,
yeah, that's true.
Okay, so you're likely not to get an Ethereum one because the SEC just won't agree to that. And then so you have that, and also it's just at what point does XRP flip and become the second biggest? Can it become the first, the absolute biggest? That's a much bigger reach. That's goodness. It's got to over 10x to get past Bitcoin at this point, but to do that to Ethereum, it only has to go up 4x.
So well, let's finish on this. I think, when clients talk about this with me, they always say, I don't understand it. It's just created this crypto stuff, Bitcoin, whatever, insert name.
Yeah.
It's just created out of thin air.
Mm-hmm.
It's not, there's no value to it. What, what,
why?
Why? I don't know what the purpose is, but how is that any different than the US dollar? The US dollar by itself is backed by the government.
Mm-hmm.
Cryptocurrency is backed by a community.
A common understanding, yes.
Right?
Mm-hmm. And the rules are laid out because it's in code and everyone can see it.
So it's not that far reaching.
You're saying not that far of a stretch to help people understand it?
Yeah, because the dollar is only worth, the dollar is only...
It's only worth what people want to believe it's worth.
Correct. And supply and demand, you have a lot more people. The entire world's using it.
Sure.
But who's to say that a future currency would ever be backed by a government? Now, there are a lot of governments that would not want to see that happen.
Right.
So that'd be a whole different thing. But
as I've stated in the past, I believe the US dollar is going to be the last government-backed reserve currency of the world. I think we're moving to a world where you have different pockets around the world doing it. You got the BRICS, you got the dollar, maybe. But I think crypto is going to be the one that ties all that together, because we seem to be heading down a path of less agreement than more agreement around the world. So jumping back to just understanding, I've started kind of talking to people more about it in the context of, if you zoom back to the mid to late 90s, when people were talking about the internet, they're like, what is this thing? It's really confusing. Mm-hmm. Like what, why do I need to why can't I just write a letter and put it in the mail? Right? Like, what's this email thing? And just see how much technology has transformed our life. To me, this crypto confusion period that we're in right now seems very similar to the confusion period of why we need the internet. We don't fully understand what all the problems crypto is going to solve. We didn't fully understand what the internet was going to do back then.
Right.
And if you view them as waves, obviously the internet and technology wave that came along was gigantic. A lot of wealth was created. I feel like the same thing's going to be happening with crypto over the next couple decades. So,
well, we'll continue the conversation next month. Thanks for your time, Robert.
Yep. Take care.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley. This podcast is strictly for informational purposes only and is not to be considered as investment advice or a solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investment advisor with the SEC. The host and/or guest may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guest of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.